Everyone, welcome to our webinar with Keyrenter Denver Property Management. We're going to go through 3 live case studies of medium-term rental properties. So these are 3 deals, 3 properties that we looked on the MLS, have potential for medium-term rentals, and I'm going to go through and actually talk about the numbers and talk about the composition or the spectrum of returns and expenses. So I've got the Keyrenter team here with me. Brandon, good afternoon.
Good afternoon.
Sean.
Howdy.
And John. How are you guys doing?
Good afternoon. Great.
So, lots of fun stuff. I love talking about this stuff. If you're out there in the chat, just give me a quick message on here that you can hear us and see our screen. Like to make sure things are working as we're rolling on here. And of course, feel free to ask questions throughout. Since this is a deal analysis webinar, we love engagement. We love questions. So feel free to ask questions throughout. All right. I see a lot of people saying they can hear us. I see one person saying they can't see our screen. So I'll restart everything. Can someone else let me know that you can see our screen? That looks good with the PowerPoint slide. All right. Fantastic. All right. So like I said, on this webinar, we're going to go through 3 deals about medium-term rentals here in Denver Metro. But first, we're going to talk about what medium-term rental is. And of course, quick disclaimer reminder, we are going over a lot of numbers on here, and these are our best guesses for forecasting rents, forecasting expenses. Always go out there and double check your own numbers. Before this webinar, we actually spent 5 minutes kind of sharing some stories of people giving inaccurate numbers and people not double checking their numbers. So we don't want you to do that. We're giving our best guess on numbers, but always double check everything. So Brandon, tell us about medium-term rentals and why you and also Keyrenter, why you guys started expanding here last year.
Yeah. So part of this was that we just kept getting calls of people, and some of it's just the natural need of like, I'm going to be out of my place except for I need it like 3 months out of the year. I don't want to move my furniture. Do you guys do that kind of thing? And for many years we said no. But yeah, as last year, I would say these calls started to ramp up a little bit. So that was part of it. But also, yeah, it's just we've seen an investor market that's gotten more challenging here with rates up and expenses up. And yeah, we started to see that this is a real opportunity that fits in between short-term rentals. That's a whole different kind of challenge. It's you're often spending a lot of money to really get a place to where it's competitive in the market against short-term rentals. This sits in a nice place in the middle where it's not as much work to manage. You're not engaged with it every single day. It's less expense to set up, but offers some premium rents for the right property. So yeah, we embarked on this a little over a year ago, at least to trying to start building the infrastructure so that we could manage these. We took on our first one maybe July, something like that. Does that sound right? Oh yeah, it's on the slide. I can rely on that there. Yeah, so our goal for this year, I think at the end of the year we had, I don't know, maybe a dozen or so at the end of 2024. So our goal was to get to 60 by the end of 2025. So well on our way there. And yeah, we've been helping investors convert over, and to this point, it's gone really well.
Congrats. Nice to see you're on track for the goal. And one thing to just clarify here, in case people don't know it, medium-term rentals are 30 days or more, correct?
Yep. So we're defining medium term as over 30 days. A lot of times that's where you start seeing some regulation from municipalities or HOAs, that kind of thing. A lot of them will say nothing under 30 days. So it leaps that hurdle. And just it opens up. It's a different type of tenant, right? It's somebody who's, there's a lot of different needs for why people need this housing product. We'll talk about that on the next slide. But yes, over 30 days, typically it's most of ours. Sometimes they'll reach out and they have a need for 3, 4, 5 months, something like that. But a lot of times we're starting with something in the 30 to 60 day range. And then sometimes it's open-ended where they are renewing as, their plans change along the way.
And I've seen a shift, I think, based on various market dynamics where medium-term rentals become, I think, more popular and also a little more mainstream. We all know, Denver and other municipalities around town have started getting harder and harder on short-term rentals. So a lot of people started shifting away from short-term rentals with those local regulations. And also when the market started shifting a couple of years ago, I know initially a lot of like the daily revenue numbers from Airbnb dropped quite a bit. A lot of people are like, hey, the juice isn't worth the squeeze anymore. I've seen my own clients shift towards medium-term rentals, and this seems to be like one of the better strategies in the current marketplace.
Yeah. So we've seen both where people are getting out of short-term either because of some kind of regulation, whether it be like City of Denver, HOA, something like that. And so we see people shifting away from short-term into it. So that's some of the clients we've been bringing on. And then we also see people who have a long-term rental and it's just not performing. They're experiencing the headaches of taxes are up, insurance is up, HOA is up, and then rents are even maybe down a little bit. And so this is a way to kind of get out of that, or hope to increase your revenue on it a bit.
So what type of tenants stay in medium-term rentals? Is it just traveling nurses?
Okay, so I've had to kind of yo-yo on this one. Early on, everybody was saying it was all the nurses, and then some of the chatter was like, no, that's actually not nearly as big a segment as we thought, and that's kind of dead. And it was like this COVID thing that everybody can't seem to forget the travel nurses during COVID, and that being what defined this category. So I thought, okay, we're moving away from that. It's mostly this other stuff. But then as we've ramped this up, we see more and more interest from travel nurses. So maybe the category is not as gone as we thought. I will say this. One thing that people seem to remember about that is crazy housing stipends went along with the travel nurses, especially in the COVID era, right? That's gone away. So we see a budget conscious travel nurse who, oftentimes it's two of them wanting to, and they're splitting a 2-bedroom, that kind of thing. But that is a pretty big part of this category. But there's other things too. So
what percent would you say are traveling nurses? Or is that hard for you to?
So Misty said at the last walkthrough that it was more than half.
Yeah, I think a part of it could also be our current portfolio as well. If you have those budget type of, 2-2s, 2-1s, 1-1s, you're going to see more travel nurses, especially if you're in proximity to those, employment places. So yeah, I guess it really largely depends, but a lot of our portfolio, I would say slightly more than half of our portfolio are those budget 2 and 1-1s.
Yeah.
So I think it checks out. So
okay, who makes up the other half of people staying at your properties?
So then I would say it's all over the place from there. Some of it like these categories I highlighted. Students, sometimes we're getting an insurance, the house burned, it's going to be 4 months to get it fixed. They need something in the meantime. Some of it's just the digital nomads. I can work from anywhere, so I'm going to go spend 3 months and get a bunch of mountain biking in or something. Some of it's the business travel. It could be grandpa and grandma want to come be close to the grandkids, but not living with them for a couple of months, that kind of thing.
Yeah, parents coming to visit over the summer with their kids in school. They want to come see what's going on. Long-term care patients around hospitals as well. Their families coming to stay.
A couple I'm talking to right now, they're trying to sell their home, 6-bedroom, 6-bath home. So they moved out and they moved into a midterm before, so they could sell their house, get it staged, and make it easier for showings. They're also moving to San Francisco, and where they're moving there because they couldn't find a house to buy right away. They don't know where they want to be. They're renting not a fully furnished, but more of a partially furnished, which really just means furniture and things like that. It's not fully furnished with silverware and linens and everything like that, but they're basically in the mix right now with dealing with midterm.
Interesting.
Yeah.
All right, so let's jump into the deals here, because this is always my favorite part, either walking a property or looking at a deal. I think, Sean, you're in the hot seat for this, right?
Yep. Yeah.
So as of last week, these were all active on MLS. Did anybody go check today to just make sure nothing's under contract?
I didn't check. I think I checked late last week, and they were all still on market.
If we have any realtors on the call, maybe if you've got your MLS open there, you could
think
drop in the chat if these are all still active.
If any are on the market, I think it would be this one, just because the purchase price was so low. I think it's one of the cheapest pieces of real estate in Denver.
And we all know condos are just so hot right now.
Yeah. So
that sarcasm you couldn't tell out there.
Yeah. So if anyone, I think it's this one. There were some others in this apartment complex actually listed 60, 70, 100,000 more. So I think it's really undervalued, honestly. Although if you do punch in this address, it may not be in the best part of town. But really, I think the numbers work really well on this
The
one.
pictures look great though. I mean, just looking at it there, like that looks like that is
Turnkey.
rent ready
Yeah.
and medium term.
Yeah, I was impressed. I'm like,
Yeah.
although I didn't call the agent,
Oh, someone said they can't see the screen.
Yeah. All right, I'll refresh it. We got a comment here. Can other people not see the screen? Yes, there's some on the screen. All right, so some people can see it, some can't, and we got somebody saying it's active. So I'm going to refresh the screen here sharing, and I'll upload the slides too in case some people are having trouble with it. I'll upload those here in a minute as well while we're chatting about these. So we are at the property we're talking about is 12480 West Nevada Place in Lakewood. Now, as we're just talking about, these are 3 properties that I think Sean found the MLS just to go out there and say what look attractive. Let's go run some real numbers and real deals. And this was one of them.
Yep. Yeah, absolutely. So there's 3 deals, and I think they all kind of represent maybe people.
Keep talking. I'm going to do, I got to try to fix this error right here. Right. Yeah, but keep talking.
Yeah. So the 3 deals we're going to go through kind of represent maybe 3 different types of investors or 3 people in different stages of their investing journey. So I think this one makes a lot of sense for somebody that, maybe is trying to get their feet wet with their first investment. And I, just for a frame of reference, I did run all of these at 20% down, 6.5% 30-year fixed interest rate, which I think is probably doable with 20% down today. I mean, maybe it fluctuates 0.5%, but so this one, the purchase price is at $135,000, down payment $27,000.
Gosh, that is cheap.
Yeah, so I think this one makes a lot of sense, and your monthly mortgage is just under $700. Your HOA is still fairly low at $270. I have utilities in there at $100, taxes, insurance at $100, and then management at 20% at $306. So all in all, we did factor 90% occupancy. So that comes out to $1,530 a month, and your monthly cash flow is $71. That's with property management, including all utilities paid. Really, if I think most people would probably buy a deal today if I was like, hey, you could about break even after management.
We need to stop and marvel at that, right? Because we haven't seen a deal that really pencils out like that in a long time.
Yeah,
even to break even with management.
Yeah, so break even year 1, 2.
One thing we'll highlight too, we often get this question of, what's the occupancy rate we should count on here. Overall, our approach has been to be pretty aggressive with price and try to keep vacancy way down on these. And yeah, we've been sitting over 90% as a portfolio.
Yep.
I'm shocked at how often we have a move out and then a move in within 3 days, right? And then the average stay, I'd say, is between like 60 to 90 days, something like that. And most of the time, we're not really seeing downtime, or like I said, minimal 3 to 4 days. So if you're doing that, 3 or 4 times a year, you're well over 90%. But I think 90% is a safe number because there'll be some slower seasons and that kind of thing.
Yeah. Yep. Yeah, absolutely. And I think, there could be even some variance in market rent. Like, is $1,700 on the table? I think absolutely. Is $1,500 on the table? That could also be, a scenario. So, but I could also, like you said, at $1,600, I could see a tenant being in here for 3, 4, 5, 6 months at a time. We've seen that in our portfolio. I know I've seen that with my midterm as well. So, I think this one makes a lot of sense, especially if you're trying to dip your toes in. And really, in the grand scheme of things, I think your barrier to entry is about as low as it can get here in Denver. So,
someone's saying that on the MLS, this is shown as listed at $199K. I wonder if they pulled it and put it
raised the price.
Maybe I bet you they got a lot of interest because I saw it last week. It was for sure at 135. Yeah. So I bet they got so much interest that they bumped it up.
Yeah. And this is also, as we said, always go out there, double check your numbers, right?
Yes. Yeah.
And again, we are not endorsing that you should go out there and buy in these places. We just want to go and pick some different property styles to go out there and see what it looks like for medium-term rentals. So again, keep in mind on here, some fun things you can play around with is, I think it's always best to plan, conservative on income, and assume your expense will be on the little higher side, right? Always best to be pleasantly surprised versus, income came in a lot lower and expenses came in higher. Those deals are not happy, are not great ones to deal with. So on here, you can always put down a higher down payment. You can also look at different types of loans or potentially buy your interest rate down as well if you want to increase that cash on cash return. And I see a lot of people on here saying they can see the screen now. So that's good. Yeah. So on this property, before we move on to the golden one, anything else you guys want to chat about on this property in terms of numbers or just things people should keep in mind if they're looking to convert one of their existing rentals or potentially go out there and acquire one?
Honestly, I like condos just because if you look at your monthly operating expense, it just keeps your overhead low. When you look at doing midterms for single families, which they can work just as well, you're just looking at higher utilities, more utilities,
Yard care,
snow removal. With condos, you're obviously not managing as much either. Like sometimes, heat will be included, trash services will be included. So condos can just be a little more hands off, especially if you're going to self-manage, honestly.
Where on the long-term side, you're obviously passing a lot of that on to the tenant to handle those things or pay those utilities, do the snow removal, that kind of thing. But yeah, on medium term, we haven't, like, typically they're expecting this to almost be like an extended stay hotel with pretty minimal responsibilities at the place.
And if anyone out there has trouble seeing the slides, I did upload a PDF version of the slide deck if you want to download that and follow along. I wasn't emailed afterwards, but since a few people have trouble seeing the screen, want to share it now, just can see the numbers and the photos on here. So have you noticed at all with, HOA docs where condo complexes are like explicitly outlawing or not allowing medium-term rentals? Very common for short-term. I can think of my time as an investor and realtor out here. I think there's been 2 condo complexes where they explicitly outlawed rentals of any type, but I've not seen anything about medium-term rentals. And I have not looked, lately. The last couple of years I've been out of the game on that. So I'm curious if you guys have seen it, because I don't remember there being language one way or the other about medium-term rentals.
The biggest barrier to entry, if you do have a condo or something in an HOA, your first step of homework, and I have this conversation all the time, is look at your HOA docs and look at specifically lease length minimums.
Lease length minimums.
Yep, lease length minimums. Although it's not saying you can't do midterms, but if your lease length minimum is 6 months, midterms pretty much off the table. A lot of them are 30 days. Some are 60 days, which we actually just onboarded our first client with a 60-day minimum, or actually we have 2 now, I believe. So we're trying it out.
We'll see how much.
Yeah, it's untested. So, we disclosed that to them. We're like, let's try it. So, but like 90 days or 6 months is pretty much kind of a nail in the coffin on this strategy. It's just hard to get people to commit to that.
Some of them too will have like, before a tenant is able to move in, you have to send a copy of their screening report to the HOA for approval. There may be something like that while it could be done, it might be a pretty big headache when you're trying to turn this thing over, 4 or 5 times a year.
Yeah. So bottom line here is a great reminder, whether you're buying a medium-term rental or not, but you're buying a place, please review the HOA docs. There's been some, I say, more horror stories lately than I typically have seen about people not reading HOA docs. Man, read them to understand the rules like this, and also for the overall just financial health of the HOA as well.
And this you're not limited just to condos. If you're buying a house for this, make sure you check there too, because some of the, like, especially some like high-end single family home communities with, maybe the average value in there is over $1 million. They may have something like a 60 or 90-day minimum is more common than it used to be at least.
Yeah, we just had a client that he's going to sign up for long-term, but beautiful home with like almost panoramic views of the mountains. And I was like, this is going to be great on midterm, and HOA 6-month minimum. So pivoted to long-term. It's still going to do just fine with when he bought it, but would have done real nice if we could showcase those views for him.
Oh yeah.
I guess that's something else to think about too. Like if you're going to buy a condo or something in an HOA, think about it from all angles. If the HOA comes out and they're good with 30 to 60-day minimums, and then a year down the road they change that, is it still a good long-term rental?
Yes. Yeah. You should absolutely run numbers for both. I think it's great, but with any piece of real estate, you should always have an exit strategy. I guess if it's long term, that's pretty tried and true. You can bank on that. But if you're doing midterm or short term or anything creative, rent by the room, I always think you should be looking at your long term numbers and get comfortable with those, because should always
have a plan B.
So,
all right. So this next property is what I have all three, the one I'm really most interested in talking about, just because it's so unique and I think it's like a heart of Golden. So this is a fourplex with 2 2-bed, 1 bath, and then 2 1-bed, 1 bath. So we got some photos on the screen here. Talk to us about the importance of location. And also, I'd be curious, because this looks a little dated on here, would it need to be updated as well?
Yeah, absolutely. So, everyone says location, location, location. That's also why I identified this property. With short terms or midterms, if you have a phenomenal location, it makes marketing so much easier, and you can really drive that vacancy number down as well. And then when you're looking at wealth building, we're all on this webinar to build wealth at the end of the day, right? And if you cash flow $200 a month, it doesn't matter if you can liquidate in 10 years with another $1 million on your net worth. So really, that's what this is much more of looking at getting prime real estate that has some serious potential to appreciate, and a little bit of sweat equity. So yeah, Chris, absolutely. I do have in here budgeted about $20,000 per unit just to do some cosmetic updates.
Okay.
I obviously don't know if there's any major issues with the property, but just cosmetic, maybe a new bed or a new kitchen and bath in each unit, something like that. And then I also have a furnishing budget in here too. That's going to be, about $10,000 a unit. And so, yeah, just looking at this deal, I guess it's at 1.7 down payment, 20%. You definitely have to have some capital, but the kind of investor I'm thinking this might be appealing to is somebody that is maybe well into their investing journey, or maybe has an external partner that can put up the funds and is looking to go for the wealth. You're not really going to cash flow much on this, although I think you might be surprised by some of these numbers. But really, I think this property has some serious potential to, once you do liquidate, and it could be as short as 3-5 years, maybe 10-15 years. I think it's going to be, a great property. Golden is so hot right now. It's insane.
I actually had one of my an investor I know, as he was kind of very wealthy investor, but downsizing, sold his house in Denver and actually bought a smaller B&B place up in Golden. So very similar to the medium term model. Hey, they stay there for a couple months, travel for a few months, come back, stay for a few months, travel for a few months, but still the investor mindset where, hey, I got to have other income on the property, offset it. Absolutely loves Golden from the lifestyle aspect, and absolutely been crushing it with the numbers as well. So there's some interesting plays up there too. I was like, oh, wow, you downsize from your 5,000 square foot house to go live in a place like that. That's a really cool story.
Yep.
So a couple questions on here. Dawn asked earlier, do you recommend that a medium-term rental be fully furnished?
Absolutely. So yeah, it has to be fully furnished. These people are coming in with pretty much just a suitcase. So just as furnished as if you've stayed in an Airbnb, that's pretty much the level of furnishings you're looking for. It doesn't quite have to be as polished. It's not usually themed. It's more, these people, they don't want to look at a neon sign for, 4 months straight. So you don't need all the selfie walls and all the, kind of extra bells and whistles that you see on some of these short-term rentals. So it can just look like a normal house, but well furnished. Absolutely.
Yeah. It'd be kind of a minimalist vibe maybe but yeah, you want one thing. This was, we did another webinar we could link to that where we got more into the details of that, but oftentimes having a desk in one room or one area where they can have a work area. Basic stuff like beds and a nightstand, and it doesn't need to be to the nines or over decorated or something, but you want it sleek and looking good.
I see a couple questions in here asking about actually on this Golden property, what are the numbers? So perfect thing to lead the next slide here.
Yeah, absolutely. So when I was looking for these deals, I went to Airbnb. This is how I get my numbers. This is how I got my comps. Is I went to Airbnb, you put in a 30-day minimum, and you look at Golden, and there's not a lot available. It just goes kind of back to supply and demand. And so what I was seeing is, for a 2-bedroom, pushing into the mid fours, 4,500, for 1-bedroom units, 3,500. When people are looking to stay in Golden, they know they're not going to get a budget play. And 2, they're looking for like the lifestyle, literally just being minutes away from multiple hiking trails, biking trails. So these people, I think our ideal client on something like this is longer term vacationers, or maybe, a travel nurse that is looking to, have a much better experience, not just about the money, but they're like, wanting to experience everything Colorado has to offer, stuff like that. So I do think your turnover might be a little more often, but with the location where it's at and with being recently remodeled, I think you can still keep your vacancy super low. Our one property that we have in Golden was I think probably our easiest to book. It was booked so quick. So I like Golden a lot.
We started that one at 2,800, and I think it's now at 3,200 or 3,300 a month.
Yep, 33.
And that was basically a 1-bedroom with an office.
Yeah.
Yep, and it's not downtown Golden, right?
It's a 5-minute walk from this, but
yeah, so it's still pretty local, but I think just being right there in the thick of it can push rents just a little higher than that. So
all right, so about $16,000 a month gross rental income, maybe about $14,400 after we take a 10% vacancy. And looking at the operating expenses here. So yeah, we don't need to go through all the taxes, insurance, and things like that. But on properties like this, you still keep like a 5% maintenance reserve and 5% CapEx reserves. Is there a big difference between like long-term and medium-term rentals on that?
No, not necessarily. With this one, I can tell it's kind of an older building, so I definitely wanted to add that in there. I don't know. It probably has a boiler. Maybe it has a boiler. Like usually just fourplexes. You definitely want to be budgeting for that. That could be a huge miss on your pro forma. And then property management with 4 units, we would be managing at 15%. So that's at 2,400. And then looking. Oh, we don't have it on this slide, but I think we're cash flow positive on this one. Utilities at 750, and these are all estimates. Yeah, so barely cash flow positive, but still, especially with getting a property like this in Golden, I think being cash flow positive is. I was actually surprised by these numbers once I penciled them out, including CapEx, property management, maintenance reserves. Cash on cash return might not be the best on the planet, but this is, again, like I said, a long-term play. I'd love to see cash on cash return with some appreciation and loan pay down numbers. I should have ran that one.
Yeah.
But I didn't.
And you're assuming a 20% down payment on here, which is conservative for a fourplex. So put more money down and cash flow more.
Yep.
So when you guys are looking at property types, do you have a big difference in prices you get or vacancy or occupancy you get if it's like an attached property, like a fourplex or a condo versus a detached property? Have you noticed any differences on that, or are the property types just so different that you can't discern any trends?
One thing I would say here is just right now we are struggling with our condos that are long-term rentals, and we are not struggling with our condos that are medium-term rentals. So it's more, that's where I see this huge difference, right? And I think this could really make sense for some of our clients who have condos where they're just struggling to get them rented, longer vacancy times, because there seems to be really good demand for condos for medium-term rentals.
Yeah, no, I think it's a great alternative, especially compared to long-term. Looking at, specifically like single family versus attached, I do think it's kind of comparing apples to oranges. Usually with detached, you're just looking at moving most likely a family. And so I think you're just marketing to less of the tenant pool. And so usually what you'll see is longer gaps between tenants, But usually if a family's moving in from out of town, you'll see them staying for longer. A lot of times they're relocating because mom or dad has a relocating because of work. Maybe they're on an insurance claim. Their house might have been subject to a fire or flood. So although it might take a couple weeks between tenants, we don't see those 1 or 2 day turnarounds very often. Usually these people are here for sometimes as much as a year. If a lot of contracts for work are about a year. So or they don't want to pull their kids out of school, so they're going to be here at least until the end of school, stuff like that. So
I see a question in the comments here. This place is currently in pretty bad shape. How would $40,000 rehab budget be enough to get rentable? So 2 things on there. Again, this is a very high level underwriting we're doing here. So
We didn't go walk the property.
yeah, we didn't walk it.
get
We
an
didn't get
inspection.
bids or anything on there. So it's just ballpark. And it wasn't $40,000 for the rental budget. It was $80,000 total, or about $20,000 per unit. The $40,000 was a furnishing budget. And I'd say for a little bit of CapEx on fourplexes and then a nice facelift, $20,000 units, a very reasonable ballpark, I would say. So
Yeah.
just for clarity on there.
And I think we, again, without seeing it and stuff, we weren't assuming you're going to remodel every kitchen and bathroom or something like that. It's maybe it's some new flooring, paint, fixing a lot of the, maybe little things that aren't quite right.
yeah, and you'll be
fixtures.
You'll be surprised too. I think if you're walking a fourplex with a contractor and you're like, hey, we're going to be doing all 4 of these units, give me your best price on one, you can get some pretty competitive prices out there too. So I've seen actually less for full guts, less than 20,000 on 2-bed, 1-baths.
Yeah.
So it just depends on, it's not about what it's about who I think with something like this too. But yeah, no, I think you're right. I mean, it could be as high as 30,000 a unit. So
Yeah, but I think just to clarify, it was 80,000 from the rental budget, not 40,000. And I think for that's kind of my rule of thumb for MLS scanning. Oh, rough shape, 15, 20,000 unit. So I think that's a good, sitting our butts sitting in our computer desk right now, a good ballpark estimate.
Yeah, it's at this point, it's kind of is there enough here to say, yeah, let's go tour it and dig in and refine these numbers.
and maybe you can knock 200 grand off the purchase price.
There you go.
If it really is in that bad a shape. So,
because that was that what you had listed there was the list price, right?
yep, absolutely.
Yeah, I don't know many fourplexes going for the list price right now.
No, yeah, I think it's a little overpriced, honestly. And it had just went to market when I ran these numbers. So if you let it, season on market, usually you can negotiate a little more too. So
I mean, all fourplexes, they're down 5 to 20% in prices. So yeah.
Like I said, that one's a long-term play. I mean, that spot is 10th and Ford, so you're 10 steps away from the creek, and you're looking into the future as well. Like somebody could be knocking on your door 3 years from now asking to buy that land from
who wants to redevelop.
They don't even care about the building.
Yep. Yeah. All right, so we're gonna move on to our 3rd and final property, which is in Westminster. And this place looks gorgeous. Looks like it's a flipper special, is what it looks like. But walk us to this one.
Yeah, so this one is actually listed for more than what I ran the numbers at. I think it's been on market for 6 months. I drive by it every day. It's kind of right on Highway 36. I like this property just because it's butts up. There's a creek that kind of runs through the backyard, and it makes a lot of sense. I think it's already fenced in, but with midterm rentals, being able to allow pets makes a world of difference. And so with this one, it has a walkout basement underneath, and you could advertise kind of as pet friendly. The pets can just walk right outside. I think that's going to keep your vacancy so low. So that's kind of why I picked this one. And I think it's listed at 540 or 560, but I went ahead and put it in there at 520.
Yes, so it's at 549 and already has gone through 20K price cut.
Yep. Yeah. So I think it's very realistic to come in at 520. I'd maybe even come in at 499 and see what happens. If it was me. And but I put it at 520.
I like your style.
Yeah. And down payment 20%, a little over 100,000 invested. It does look pretty turnkey. The only downside with this one is I do believe it's an up-down duplex, but the bottom unit, like I said, is a walkout basement. So I like it for that reason, although I'm usually not a huge fan of up-down duplexes just with privacy and noise complaints. But taxes and insurance got that at $500 a month, utilities $400, furnishing budget of 20 grand. And then, you're just under 125,000 for your initial investment.
Correct.
I mean, I'd say 20,000 for furnishing 2 units. It's kind of you're going to hustle a little bit on Facebook Marketplace and some of that, but not, it's a decent amount of money too, where you can, a lot of that stuff you could buy new and get somebody out there to build furniture and that kind of thing.
Yeah, absolutely. Yeah, for sure. If you are kind of okay with a little bit of, hard work, once you're under contract, if you just scour Facebook Marketplace, you can find entire like bed sets for $500, versus going to American Furniture.
Yeah.
And
you could probably get that
$1,500.
down if you wanted to quite a bit. Like there's some room to hustle. And some
Yeah,
of these numbers.
I furnished my 1,000 square foot two bed, 1 bath completely furnished for like $2,700. So and it was all Facebook Marketplace, and it looks nice. It doesn't look like $2,700.
This place has been on the market for 202 days.
Yeah.
So I would agree with, you can probably get another list.
Yep. So yeah, I think it makes a lot of sense. It's super centrally located as well. Like I said, right on 36. They actually just put they just dropped $5 million. The city of Westminster just dropped $5 million on a rec center that's it is walking distance, probably like a 5-minute walk. Aquatic center, it's really nice. So you could advertise that on your midterm that, there's pretty much a gym in your backyard. They just put in pickleball courts, also walking distance, and they're about to redevelop a park in that area. So I just know this because I live really close by. And so I think it's a great investment, and there's not a lot of duplexes for single family prices.
Yep.
And it's a zone duplex. So that's why I like it.
Yeah, I like this. I like this play a lot as well. So we're assuming better rent for the upstairs unit, 2,200. Not quite as good for the lower unit, 1,800, which sounds about right. And I guess when you list medium-term rentals, do you list this as a lower unit or upper unit? Do you list that so there's no miscommunication and no surprises for your guests?
Yeah, absolutely. Yeah, you want to be very upfront that it's a basement unit. You don't want them moving in and wanting to move out a week later because they're not sure what it is. With this one being a walkout though, like I honestly think 1,800 we might even be able to do a little better. And these numbers, these numbers are very, very accurate because this is a lot of our portfolio. So I think this is a very realistic. I think this is the one I actually feel the most confident about with the numbers. And honestly, I think that there might, like I said, with the walkout and being able to advertise pet friendly, I think we could even bump that 1,800 up a little bit, especially if I don't think there's any pictures of the downstairs. It just depends on what it looks like. So.
Okay. And then going through the numbers on here, walk us through these, Sean.
Yeah. So, all the expenses are listed right there. I don't think we have to go through every one of those, but really at the end of the day, your cash flow negative about $610 and your annual cash flow is negative $7,000. Again, here in Denver, it's hard just to break even. So, I think it could come down to what can you get on the purchase price? Can you maybe throw an extra $50,000 into this deal and make it break even?
Buy down the rate.
Yeah, buy down the rate. If you're staring down like a 1031 exchange and you have the extra capital, like this could be a great deal. So, it just depends. I'm only running it at 20% down. Maybe that's my limited belief because I don't have the extra couple $100,000 to throw into deals these days. So.
No, but those are great points here because you always put more money down. I mean, it's really common now. Hey, you get a full price offer and then 3% concessions in the back end to buy the rate down or minimize out of pocket costs. So I think the point here is kind of show 3 different properties here, some high level numbers, and let people understand. Hey, here's what it looks like to acquire, but also I know a lot of people have already rental properties on the they currently own. Look at conversion as well. We talked about this, like you guys see the majority of your portfolio coming from existing inventory that's being converted to MTR either from short-term or long-term, right?
Exactly. Yep.
Yeah. Is that like the vast majority of it?
Yeah. Yeah. We have some people that are looking, they reach out, we pencil out the numbers for them.
We've had a few that were recent purchases or
some
sometimes like they bought it and they've operated as a medium term rental for a year or something, but they're ready to just be done with the management side of it.
Yep. Yeah. But yeah, a lot of people, if you're just looking to force a little more cash flow, especially like Brendan was saying earlier, like the condo market is so tough right now. So if you're looking for an alternative, I think that is where the juice is definitely worth the squeeze for the most part. So.
Cool. All right, so we're going to do some Q&A here. We got some questions in the chat. I'll come back and visit. But while we're transitioning the Q&A part, we do have Sean's contact details on here to reach out to Sean, who runs point on working with a lot of new clients at Keyrenter. The monthly management fee is between 15 and 20% of rent with a one-time $250 onboarding fee. So first question I'm going to ask you, Brandon. I think it was maybe last year you converted 1 year. I think you had a Cap Hill long-term rental to medium-term rental. How is that performing as an MTR?
It's been great. Like I said, that one has had 3 days vacant or so in between. I think we're on to our third guest moving in soon.
And you're just averaging a couple days vacancy between the two?
Mm-hmm.
It's amazing.
Yeah, so that part's been great. Already, I got an email yesterday that the next guest is lined up after this current one we have. So the turnover has been very minimal. The rate has been ticking up a little bit. Like the first guest we had in, probably when the dust settled on paying for the internet and utilities and that kind of thing, that would have typically been passed or had in the past, I'd passed that to the long-term tenant. The first guest, I think, was only at like a $200 a month increase. So if that was the long-term perspective, like probably not worth it.
Like a net $200 increase?
Yeah.
Okay.
But then the next guest, it was like 340 more than that. So yeah, part of it's just like our team getting, first of all, we're trying to get people in. We don't want a bunch of vacancy, but we're also like increasing the price over time. And so it's been really good. I've been happy with it so far and optimistic that it'll continue to be a good decision.
Right. Well, what's the average stay? Is it roughly 30 days or are you seeing 60?
It's been, I would say like 40 to 70, something like that. So it's probably averaged like 60 days.
You came to market in like right in the slow season though, didn't you?
Yeah, it was like first week of January or second week of January.
Yeah, I think, in the slow months, that's usually what I advise clients is you're just going to have a slight premium on top of long-term rents, but then, usually you can,
you make more of your money.
You make a lot more in the summer months. And then, if you can just get long-term rates or a little more than that through the winter, obviously still going to make more sense if you can push those rents up pretty high in the summer months.
In so many ways, this medium term sits right in between short-term rental and long-term, where it's like obviously what Sean just said is a huge deal in short-term. Like your rents are like highly variable summer season to like a winter season, depending on where you're at. But like in Denver, it'd be slow in the, November to March or something, and then it picks up through the summer. So it's like we see some of that, not nearly the extreme that we see on the other end, but like with long term, we don't see those fluctuations.
Yeah, I did want to say on that Westminster deal, Westminster is short-term rental friendly as well. So with that deal, that's another reason why I like Westminster too, is maybe you do a hybrid model where you short-term rent the upstairs, midterm rent the downstairs, or you short-term rent in the summer and then you midterm rent in the winter when it's slower. You're just having plan Bs. I think that's why I like that Westminster deal, is you have plan A, B, and C when you're looking at real estate in Westminster, which I like a lot.
So before we get into the chat questions here, Brandon, if you could go back in time, would you convert your property to medium-term rental again?
Yeah, absolutely.
Okay, that's always my favorite question.
I've been debating if I do it on. I have a duplex in Littleton. It's not vacant right now, but there's one coming up, and I've been thinking on that one too, because that's more in like a traditional single-family neighborhood. And I wonder if that one would offer a pretty good premium as well. I feel like I'll see this one through longer before I make that decision, but I'm happy with it.
Great. All right. Some questions on here. What kind of occupancy rates are you seeing in high-end or luxury midterm rentals? For example, as a pure hypothetical, any midterm with valuations of $1 million plus and $5,000 or more in monthly rates. So vacancy in like the upper end luxury parts of midterm rentals.
We did a property walk with and it wasn't a property we were managing, but someone else that kind of fits this description. He's had this one for a few years and paid like $800 or something for it. And I would say, so I'm kind of regurgitating his thing, but he was getting very premium rents. He was shooting for 1% of value or 1% of purchase price.
He said he'd averaged 8,500 over the last 24 months.
Yeah, and
8,500 per month over the last 24 months.
Yeah, and he was seeing. And this question was about vacancy or occupancy rates. He was saying, I think, more like 15 to 20% a year vacant. But he'd also hit the jackpot on a couple where he had one where it was like a Marshall Fire thing, and they ended up extending. Stayed for like 2 years in one of his properties
at a very high rate.
Yeah, like
it was like
12,000 or something a month. So yeah, I don't know if we have anything that kind of fits that over 5,000 a month.
No, I don't think anything active in our portfolio right now over 5,000. Yeah, some that we're talking to.
We've generally seen that as it gets into the like 4,000 plus, it's a little more vacancy, more like appeals to families. Just it's not as like quick, like just someone quick booking something because they'll be in town for a couple months. But
yeah, I think there's definitely the demand out there, but a lot of people that have properties like this usually don't need to take the risk of midterm, is what I see. Like I've talked to a handful of clients and they just usually.
Why would I do that?
Yeah. I'm very upfront about the risk that you're taking, and that, it's not as tried and true as long-term rentals. And so, for them, I guess the squeeze just isn't. And when you look at furnishing, a 5-bedroom place.
He was saying like 60,000-70,000 was his budget to furnish some of these 5-6 bedroom places.
Yeah,
sounds nice running in my house,
Yeah,
and I think he even had a room in the basement that was just full of extra furniture for other homes, and it was just kind of mix and match. And so I mean, it was definitely something he was dedicated to.
I think what I took away from that though is there's opportunity there if you're willing to hustle and like, again, most people that own $1 million property are not looking to do that. And so very little competition. But yeah, some upside there, but you got to work for it and there's risk.
All right. Next question here. How much does garage parking and in-unit washer dryer add to monthly rent or demand? Do you guys have data that granular for garages and in-unit washer dryers?
I don't think we have definitive data that's going to be that granular by any means. What I can say is if you don't have a garage and you don't have in-unit laundry, you're definitely in the budget play. So you're looking at traveling nurses that are really trying to save as much as that stipend. So it's like a little pay bump for them. There's absolutely a need for that though. Like that's some of our highest occupancy rates are the budget play midterms. So, I wouldn't let that scare you by any means. Just reach out to us and get a very realistic number, because we have those in our portfolio and we can tell you pretty close of how those are going to perform.
And now let me do a little public service announcement here to piggyback off of there. If you're looking to buy a property, and this is not just a medium-term rental, but buy any type of investment property, talk to your property manager before you close on the property. As I said earlier, we're kind of swapping some not so fun stories. Hey, clients who close on the property, then they call Keyrenter like, hey guys, I'm ready to rent this. You're like, great, I'll rent for $3,000. But my realtor said rent for $5,000. I don't know what to tell you, but here's what I'll rent for, $3,000. So again, nothing against agents or realtors. Hey, their specialty is, buying and selling properties, and they'll often do their best in estimating rents. But lesson I learned early on, talk to your property manager and have them come walk the property while you're under contract, and ideally during inspection. They are the rental experts, and that can save a lot of headache and potentially help you save a lot of money as well for buying a deal that pencils out.
Just one more thing to add to the question about how much does garage parking and washer and dryer add to the monthly rent. Something to think about as well is, what about the opportunity cost of not having those things? Like vacancy, people might pass yours by because they want a garage or they want washer and dryer. So if you don't have certain amenities, like not having an air fryer isn't going to make or break the rental, but people are living there and maybe they don't want to go to a laundromat. So having a washer and dryer is a huge convenience. So that's just going to mean that your home rents more often.
Or they'll stay longer.
That too.
Yeah, I get out of the stats, but like, I mean, I'm in my 40s now, and me renting a place without any washer and dryer is just, that's no go for me. Like, that's not my college age going to laundromat.
Right.
But I think I like your point a lot on there, John, as it just helps to like, and this is like a general commentary on the market, but hey, when things starts going sideways, right? Like we're seeing now, just even long-term rentals, the Class A properties, hey, we're seeing rents drop some, occupancy drop some, but the Class C properties are getting the worst of the effect where they're dropping double digits in rents versus maybe a couple single digits because they are the least desirable. And then, all else is equal, I can go to John's place with a garage and washer and dryer. Sean, you don't have one, but his is $50 more a month. I'm gonna go to John's.
Yep.
So I think that's a great thing to keep in mind because that does help hedge risk. How do you market your midterm rentals?
Airbnb is one of our biggest drivers for sure, and Furnish Finders is also a really big one. Furnish Finders is synonymous with traveling nurses, so it's not just traveling nurses, but Furnish Finder takes a lot of work though. The leads don't come to you like they do on Airbnb. A lot of times you have to work the leads and stuff like that. So really being diligent and reaching out to leads is can be a lot of time consuming.
Furnish Finders is nice though because it's just one cost for the platform fee for the year. You're not paying a percentage of the rent, where Airbnb is taking, what does it come out to, about 12% or something like that.
Yeah.
So we're trying to get people off the platform if at all possible. So we're having a lot of people book like the first 30 days through Airbnb, and then if they want to extend, we'll do that off the platform and avoid those fees. So that's a nice bump in the revenue, and that was factored into the numbers we were putting in here of those platform fees.
Yeah. And tenants know that too. They see the 12 fees that they get from Airbnb, so they're actually asking us to come off platform most of the time. It's pretty obvious what Airbnb is doing there. Insurance companies, networking with them, getting on their lists and stuff like that as well.
Yes,
yeah, that's a big push, is insurance companies, corporate rental placement companies as well. I think that helps open up those larger homes also. Like right now, we're not getting a lot of traction on those insurance companies and those placements, but
yeah, the travel nurses kind of recommend each other, or like recommend us. So we've had some of that where we'll get direct outreach from people like, what do you got coming up? I'll be there in a month or something.
Next question. Are there any special features that add the most to the monthly rent, or anything that really sets the rental apart from other rental properties out there?
Obviously location. I feel like we've already hit on that one. So like, of course, if you can buy something with special features such as like mountain views, being in downtown Golden, being close to Tennyson Street, Pearl Street, being really close to DU, like anything that makes a long-term rental attractive, or it's going to make a midterm rental.
I would add that there's a little bit of nuance here that they're not touring the property in advance, so it's like it's perceived location probably more than anything of they're saying I need to be near these couple of things. And yeah, certainly it's a perk if you can walk to some restaurants or something like that, but they're also not walking the property. So I'm curious how this plays out over the long haul, but we've had some come into our portfolio where it's just like, it's not a very nice block or whatever, right? But will they overlook that, or will it be like maybe we don't see as many renewals, or it shows up in the feedback of Airbnb or something like that? But yeah, it is a little bit different than when you get to go tour a property and your sense of what's around it versus just kind of plotted on a map, and then whatever we decide to highlight is worth saying is close to it.
Yeah. Private fenced in yards. I think that is, if you can find a duplex with separated private fenced in yards, or if you could find a quadplex with 4 private fenced in yards, that's going to make a good midterm rental. I think bang for your buck, if you can find that. They're kind of hard to find. That's what you'd want to buy. Like adding, of course, in-unit laundry is also a big one. A garage with midterms, like most
Nice
of
to
them.
have.
Yeah, nice to have, But
What about like the home office setup and high-speed internet?
yeah, that's a huge one, of course. The nice part is you can do that with any midterm. Like that's not something you have to find on the front end when you're purchasing. Like you can't just add a yard, or you can add in unit laundry, but it might be a total headache.
Yeah.
But like with an in-unit office, you can add that with a trip to IKEA and a call to Comcast. So,
Great. All right, that I think we got all the medium-term rental questions here. There was a couple like non-ones, since we got a few minutes left to open up for some questions on here or discussions on here. But keep the questions coming in. We got 5 minutes left, and we'll keep firing away. A question I went back to earlier. Don said, you mentioned earlier values on fourplexes and Denver area is down 5 to 20%. Can you confirm how much you think it's down? I can give you my best guess, but I'm kind of curious about your guys' panel here, or the panels here. We'll talk about prices and also talk about rents, because those are obviously two important things on here. I think with prices, a lot depends on location and, class of property. Like, hey, a multifamily in Aurora is getting hurt a lot more than a multifamily in Arvada or Golden right now, just based off location, right? I mean, during the peak, low interest rate days, the fact that so many Aurora multifamilies are trading in the 5 caps, the 6 caps, are not very far off of a Denver or Westminster or Lakewood place, kind of like blew my mind. But now we're seeing the cap rates really expand a lot more in some of the less desirable areas. So it has to come on with locations. But overall, like, demand is down a lot. I have not seen a ton of transaction volume in like the duplexes, triplexes, fourplexes. It's a hard data segment to go off of there. So I'm kind of going off of a few deals I have seen and just talking to other investors. Like, well, I dropped my price, got no offers. I think it's somewhere in that 5 to 20% range is like my broad spectrum. But I'd be curious about your guys' perspective on there, and also talking about rents.
I know like one case study that sticks in my mind this is specifically on the rental side is I used to be a leasing agent at Keyrenter, so I leased a lot of homes. And there's this one client in particular when I was exiting leasing, so like 2.5, 3 years ago. I rented, it's a quadplex without in-unit laundry, and I rented it at like $1,750 or maybe $1,799. So
what part of town?
This is Lakewood. Not super nice Lakewood. So yeah, for a 2-bed, 1-bath, no in-unit laundry, let's call it $1,750. And
good rent.
Right. Yeah. And this is I would call this like about the peak of rents.
It's a great rent.
About 3 years ago. So yeah, great. And now I think we have one vacant. And I think we're about to drop into the 14s, $1,499.
So that's about what, a 15% rent drop or so? I think so.
Maybe more than that.
Yeah.
20% of $1,750 would be $350. So yeah, if it's just going into the 1,400,
that's
so
$250. Yeah,
so something in the 15%.
Yeah.
A little more than that, maybe.
Yep. And the same exact units, same exact location. So I think that's a pretty good case study. I've been following that quadplex specifically because I can remember. And
it's absolutely, my take would be what Chris said is like, it's the no in-unit laundry. There's no like balcony, maybe an off-street parking, but like there's just nothing going for this quadplex, right? Like those are the ones that it's crazy how low we can go and still not get any interest. And I think that all relates from some of the trickle down of like, you've got the Class A stuff hitting the market. They're offering crazy concessions. And it just like, it kind of moves, maybe it moves a lot of the tenants up market because they can afford more as these prices come down. And then what's left just is these just undesirable, like there's nothing flashy about it. The location's not great. The layout's not great. The exterior's not great. There's no amenities. So
I will say, I think that unit's going to be a midterm very soon.
We might have done a case study on that when we were doing the portfolio overview.
Oh yeah, was that one? Yeah.
If I'm not mistaken.
Yeah, you did.
And I mean, the other thing too, again, going back to this fourplex, I mean, go on the, RE Colorado and look around. I mean, the amount of inventory in general, especially fourplexes on the market for 80, 90, 100 days. I see a lot of that. I see a lot of them have withdrawn. Like I have a fourplex and follow a few properties around me. There were 3 fourplexes. 2 are pretty much identical. One's very similar. So, great comps on there. 2 are on the market for just over 100 days withdrawn, and they were listed, I think, originally like $1,080,000, dropped to $1,030,000. Absolutely zero offers, 0 contracts on there, and then place up the street, not nearly as nice and not as desirable, like setup or anything, but gosh, they're in the market for like over 100 days and they're at 880 and they're dropping their prices. So I've seen a lot of like the prices drop, and then I've just seen a lot of people withdraw from the market. So, you know, you can't see like what the real sales price is. I think for a lot of small multifamily, a lot of us have, you know, great 30-year fixed debt on there. So we're not like distress selling like an apartment building might be. So I think there's a lot of downward price pressure, but there's not a lot of volume right now to really say how much has it fallen, because people are like, I'm just not going to sell right now. Wait a year or two until the market should recover.
One strategy you could do here is find like a condo complex you like that has, because I've seen some of these. I mean, you can find 6 or 8 units all for sale in the same complex and nothing's moving, right? Like you almost wonder if they're all pricing based on everything else available in the complex. And just go make lowball offers on all of them and see, maybe there is one distressed seller who really needs out.
I thought you were going to say buy all of them and take control of the
there
HOA.
You go.
I thought you were going. I was going a different direction.
Play, but yeah, it might be a way to find something where that pencils out at just a lower number, and that way you're not reviewing individual HOA docs on all over the place. Like you could get one HOA you're comfortable with, you like the location, you like it as midterm, but just wait for the right unit to come up.
And that brings up a good thing on here. Like as we wrap up here, and you know, Sean, first off, great job to the case studies on here. You know, it's to give people an idea about opportunities, some high level numbers. But as we just talked about, like you know, those cash on cash numbers were nothing amazing. But I think if you go out there and really hunt and really do due diligence and hey, make some lowball offers on there, you know, most people aren't distressed, but hey, you just need that one or two people who are. You can go out there and get some really good deals on properties right now. We're seeing more seller financing opportunities. Seeing people are taking some really lowball offers because they need to sell or they're done with it. Now that might be 5 or 10% of the pool out there in the MLS, but go find that and go find one of these deals like this. And hey, great, I can get it for even $50,000 less than what the list price was. And then stick in a medium-term rental or another strategy out there. If you're willing to go out there and do the hunting, there are some really good opportunities out there. But you have to go out there and hunt a lot. And as one of my friends says, probably put in some disrespectful offers.
Yep.
Which is, hey, depends on which side of the aisle you're on, right? You get one, they're not fun to get, but you get out enough, one gets accepted.
If you're an agent and you've been on market for more than 60 days, you're expecting disrespectful offers. So
you might be hoping for disrespectful offer at that point too.
Yeah.
I mean, the amount of people I talk to with condos and multis where it's just crickets after 50, 60, 70 days, and they've already gone through a couple price drops, really has like surprised me, where it's just like, yeah, market 90 days, 0 offers, or maybe like 2 showings, which is just, yeah.
A lot of these guys have been trying to sell for like 3 years too. You know, they keep everyone's saying I'm going to try again in a year or two. And I'm just, you never know what's going to happen, but I think they're going to be saying that for a few more years.
That's a good prediction. All right. Well, John, Sean, Brandon, great webinar. Appreciate you guys coming out here. So if you guys have interest in here, definitely reach out to Sean. He's running point on this. About every other month, we've been doing a property walk as well. As property walks come up, we'll continue to email everyone out there. Come walk a property, meet us, learn about it. But if you're looking for ways to go out there and increase your cash flow in Denver and look for one of the strategies that makes sense, medium-term rentals are it. And Keyrenter is the first PM I've seen around here who's actually doing this at scale, which for me, I love seeing that. So thank you guys. Sure. All right. So lots of people are saying thank you. Enjoy your afternoon, and hopefully we'll see the property walk soon. Bye, everyone.
Thank you. Cheers.
See ya.